Good day, Tea with Travis. Today is November 7th, or 19th, Wednesday. And I'm not sure if any of you have been paying attention. I'm sure some of you have, but the big three, the CEOs of the big three automakers are speaking on Capitol Hill this morning, pleading their case to get some of these emergency funds or bailout funds or whatever we want to call them, our taxpayer dollars, to bail them out and to continue their operations and refitting of their manufacturing plants to become more green and do more of the hybrid type cars. Well, gosh, it was brutal. I don't know if anybody has watched it yet, but some of the senators were asking some pretty hard-nosed questions to these guys, which they I'm sure deserve. But one of the questions was how many of them flew commercial to come meet with the House Senate committee, and none of them raised their hand. And then the guy asked, "How many of you raise your hand if you flew a private jet here?" And then all of them raised their hand. And then he asked, the next question was, how many of you are willing to fly back commercial and sell your plane? And nobody raised their hand. So it was pretty interesting little dialogue going on about put those guys on the hot seat, asking for billions of dollars, and they're flying in their private jets to these events. So not that they don't deserve to as a CEO of one of the big automakers, but it's interesting to see that dialogue going on with those CEOs. I'm sure they've never been put in that position before to have to answer to their commercial jet or their company jet. But interesting times. The Dow is down. It's down a couple hundred points again, and as much as this uncertainty with these big three automakers and everything else going on, I think we're going to continue to see the decline. We're down to about 8,200 on the Dow, which if we break below 8,000, that's going to be a sure sign that we've really come about as far as we can go before it starts making sense to buy back, which already makes sense now. Mortgage-backed securities are still in sideways trading. They're still bouncing off that 200-day moving average, which has become a level of support for us. So rates continue to maintain or should improve, actually, with all the technical factors. Oil closed today, again, at a low of $53 a barrel. It was down about 75 cents. Also the CPI, which is the consumer price index, came out today, and it actually beat expectations of inflationary pressures. U.S. consumer prices fall, the farthest fall they've had per month since they started keeping track back in 1947. So inflationary pressures are down a lot right now for a few reasons. One, unemployment rates being high, but also lack of spending, people being scared, and just the cost of goods coming down. So between inflationary pressures going down, oil prices going down, and our dollar gaining strength against foreign currencies, we should see a good run into here through the fourth quarter and into the first quarter for mortgage rates. The 10-year note, the Treasury note, is actually, gosh, it's up 200 basis points in 2 days. Right now, mortgage-backed securities are still not a real safe buy, according to a lot of investors. And so investors are pouring money into Treasuries because we know what the Dow's doing. It's been on this constant downhill escalator. So outside of that, the Fed minutes were released today. It's basically every 6 weeks the Feds meet, and then they release their minutes a couple weeks later for the public to see. And they've noted that they pretty much see us being in a recession for at least one financial year, maybe one calendar year even, of 2009. So they anticipate this recession going on for a while, especially being in a global economy that we're in. So outside of that, the prices for energy declined 8.6% last month alone. So that's why this CPI, or the Consumer Price Index, dropped so much, was because of food or energy prices dropping 8.6%. So outside of that, home prices are still great. I'm still amazed at some of the houses in my neighborhood, and being rates at upper 5% range, depending on what your goals are. It's a pretty amazing time to buy. So if we can get past the economy and the fear of it, certainly a great time to buy. So give us a call if you have any questions. We look forward to serving you, and be blessed.